So everyone says buy Bitcoin and hold it long term. Yeah? What happens if you buy it at the wrong price and the next thing you know, for the next 2 years, you're holding your Bitcoin in a 40% drawdown and you're just shitting your pants worse than Andy Byron at a Coldplay concert. You don't want to do that, don't you? Now, the true money is made when you are getting in at the right price, the right position. That's where you're not getting in any drawdown. As soon as you get in, not long afterwards, price starts to go. The worst thing you want to do is be buying anything. Doesn't matter if it's Bitcoin or gold, but going into drawdown immediately. That's not gonna make you money. So let's be real here. Buying Bitcoin is one thing, but buying it at the right price is the key. Now, in this video, I'm gonna show you exactly what I have done with my position, the position I have gotten myself into when Bitcoin was at 25,000. What was I looking at and how you can copy exactly what I did so that you can take advantage of the next couple of months as Bitcoin continue to rise. Doesn't matter if you are a long-term holder or if you are a short-term trader. I'm gonna show you exactly what you need in this video. So let's get right onto it. All right, so as we're looking at Bitcoin right now, it's approaching 120. It's all-time high right now. Obviously, I think the whole internet is talking about Bitcoin. Let me first start off with exactly where I got in at so you get an idea of how we can use the same technique on other trades later on. So the first position I actually got myself into was back here in early June 2023. This is almost 2 years ago. And then the second position I sort of added to the trade was last year in 2024. I believe it was back in August, right around here after this spike down. Now, you would very quickly see that there is a certain pattern here that I am going to show you where all of this keeps repeating itself. So to first understand how to take advantage of trades like this, we need to first start off with the idea of following a trend. Now, the whole goal here is getting your position from this price to this price, right? As price goes up, you want to get from point A, in this case A, to point B. Now, the problem with this where a lot of traders or a lot of beginners, they don't quite understand is the way that price can get from point A right here to point B, there is a lot of different variations. For example, this price to this price, we could go up in this situation where it goes up, comes down, goes up, comes down, goes up, comes down, and then finally go back up. That's one scenario. Or it could do this. It could go down straight away, comes back up, comes back up, comes back up, goes down again, and then only after a couple of months, it gets to point B, right? Just another scenario here. Let's say it does something like this. It could go up very, very quickly. All right, you're not doing anything, you're not cashing out or anything like that. Price comes back down, goes back up, and then finally it goes to point B. The whole point here is just because we want price to get from point A to point B, we need to identify where exactly are we going to be getting in at the right spot so that when we get in, we know price is gonna go up quickly. We don't want to be in a situation where we get in at point A, price just goes up, hangs around, goes up quickly, comes back down, and then goes out to point, and then reaches point B afterwards. If you're constantly in trades like this, you're gonna be shitting yourself a shit ton, no pun intended, right? So the whole goal here is number one, you first need to make sure that you have a trend. Okay, knowing that you are in a trending market gives you a much higher probability that the technique I'm gonna show you is going to work. Okay, so that's a prerequisite. That's everything we do at Urban Forex. We wanna make sure that we are trading with bigger players where they are trending. So let's say we have a trend like this. Okay, now the next thing we wanna do is to be able to break this down and find exactly where we can get in. Okay, we don't want to get in here. We don't want to get in here because like I was saying before, these are times where you're gonna be shitting yourself, and you don't want to do that, right? You don't want to be in a drawdown for months and days on end, right? You want to get as close as you can to price like this. You know, you're not getting the absolute bottom, but at least as you're getting in, price starts to go. That's the most important part about day trading. Whether you're day trading or long-term investing, you want to make sure when you put your money into an asset, it starts going, right? Okay, so let's magnify this a little bit more so that we understand exactly what we're looking for to find the perfect timing. And that's the key word here, the perfect timing to get in on the trade. When we're looking at a pullback, there's 4 main ingredients I'm gonna show you. And these 4 main ingredients are the ingredients I actually used in the trade prior, okay? So if we magnify this here, this pullback, okay? It's gonna look something like this, right? All pullbacks look basically the same, right? It's gonna look like a move coming down, right? Basically, if this is the higher time frame, let's say this is the 60-minute time frame, and right here we're looking at the 15-minute time frame. If you go down one time frame, it's gonna look like it's chopping down. The first thing you wanna see is what we call a V formation. A V formation is a proprietary tool that we use at Urban Forex. I did a video on this a couple of weeks ago, just click on the link above. But V formation is the first reversal signal that tells you things are potentially turning around. So what that looks like is, as you see this, stair-stepping, trending move down towards the downside, you wanna see a move that returns like this. This is what we call the V formation. Once you have spotted the V formation, the next thing you want to see is a short consolidation. Now this consolidation can come in a few different forms. It can come in a channel form, it can come in a range form, just those 2 variations. So if I were to draw that out, it is gonna look something like this. It's gonna stall, consolidation, and then once you have a consolidation going on, we want to look for this thing where we actually call the dash of evil. Now, this dash of evil has many different names on the internet. Right now, apparently it's being called the liquidity pull grab. So what that basically means is you want to see a huge spike towards the downside, rejecting, and that's where your potential entry would come in. Okay? Final thing, all of this, it has to happen at the logical area. And what I mean by that is it needs to happen at a bigger support equals resistance area. So somewhere to the left, you need to make sure that there is SNR holding here. Either being a breach to the upper side where there is a clear zone where all of the techniques that I'm talking about here is reacting from. If you have all these 4 elements lining up, the chances of the trade getting ready at that point is going to be extremely high. Now, before I jump onto the live markets to show you exactly how this will look like on an actual market, I want to first talk about what's actually happening right here. Now, if we look at the first ingredient here, what we call as the V formation, the basic idea here is a momentum shift. This move coming down on the lower time frame, it signifies selling, right? People are out selling, on that time frame. Hence, price is going down. Now, that V formation is signifying that a potential reversal coming. To put it simply, that's clue number 1. Okay, you don't want to just take V formation and then, slap it on a chart and trade all the V formation you can see. You need to use it with all the other techniques I'm going to show here. But basically, the V formation is telling you a potential reversal is about to happen. Okay, so that's the meaning behind it. Now, after a V formation, the reason why a consolidation would happen is because there is a fight between the sellers, in this case, the downtrend that's happening, versus whatever bigger time frame players that's coming into the markets. So in this case, let's say the bigger players is the 60-minute time frame right here. Okay, this whole move is a move that's visible on the 60, and this move coming down is a move that's super clear on the lower time frame as a downtrend. Let's say this is the 15-minute. Okay, this range here, it represents the fight between the 60-minute players and the 15-minute players. It's essential here that we want to make sure that price is holding its ground here to signify that the reversal is holding grounds. Once you have that consolidation, the last final piece is that dash of evil. Okay, we call it the dash of evil because of this. Now I want you to think about this. What happens if you have a range? If you have a range, people are going to be selling at the top buying at the bottom, right? If price breaks down, everyone would hit for the sells. If price goes up, everyone would hit for the buys. Now, if you take this same exact concept, you apply it here, okay? What happens if price breaks down? Short-term traders would think that it's a sell, right? They're gonna continue looking for the sell. And as that sell happens, these 60-minute bigger players, they're gonna be absorbing all the sells right here, taking all the sell position and then buying it. Hence, there's gonna be a strong move towards the upside and then propelling this move further up. That's the whole idea of liquidity pool grabbing, where we are trying to grab liquidity so that the opposite party has more power to continue the move that it wants to. Okay, so hopefully that all makes sense. Now, that's just a 5-minute breakdown. We have an entire course covering all of this at urbanforex.com. If you like whatever you have heard so far, I do suggest checking out the courses there. I live and trade with the concepts that's taught at Urban Forex. I highly recommend it. I have been using the concepts there for the last 10 years of my trading and it has worked wonders. So without further ado, let me bring this to the live markets to show you exactly how these concepts actually ties into the live markets. Now I want to first talk about the position I got in at around 60,000 at this area right here. And I'm gonna do this so there is less distraction right here. Okay, so the first prerequisite, which is having a trend. Okay, now hopefully if you're watching this video, you know what a trend is. A trend is a move that's making higher highs, higher lows, right? And what we can see here is things are making higher highs, higher lows. So that's all done, right? Remember the idea of we want price to get from point A to point B. The whole goal there is to make sure that we get our timing right so we do not need to be holding in drawdown. So let's put this into perspective, okay? Let's say our goal here is to get from point A to point B. We want to make sure that we are getting in at a very good position where things are just gonna turn around and launch. Okay, we don't want to be getting in here and then waiting for, what's this, 6, 7, 8 months just for things to turn around and then again shitting yourself for 4 months, 6 months straight. It's not what you want to do, right? Okay, let's get back to the charts. Stop shitting ourselves. Uptrend, yes. Okay, that's the prerequisite. We got that. So now that we know that we have a clear uptrend, the next thing you want to do is make sure that you are able to read the pullback. In this case, I'm going to use the daily time frame. Then drop down to the 60 and I'm gonna show you exactly where the V formation is, where the spike was and how things propel afterwards. So now that we're on the daily, first things first, I want to mark out where the support and resistance area are, because if you're not close to those areas, there's no way in hell you want to be getting in. So right off the bat, I can see on the higher time frame there is this level here and this level, small little level right there. We can also see that this area coincides with the area on the left right here and right here and right here. So I'm gonna just draw a box there so that everyone can visualize this area. Okay, now that we have an SNR marked, we know where we want to be interested for any potential buying. Now we do not need to look at this area right here because that's just way too far off. We only want to take action as price comes down into our level. Now we did came down into our level right here back in August, and then we see a very strong rejection back to the upper side. Now this right here may not look like a perfect V formation, but it's a V formation to be looking at. So ingredient number one, we got that covered. We have a V formation. Now let's see if we have the second ingredient, which is a short-term hold. In this case, this is the hold we are looking at, right? After this V formation, we see a short-term hold. And remember the whole reasoning behind the consolidation. We want to build an area where if price goes beyond it, it's gonna get people selling. Now, if I remove those two lines here and I draw your attention to this area right here, doesn't that just look like a miniature head and shoulder pattern where if we move lower, people are gonna start selling, right? We have this low here, we have this low here, it's almost an equal low, correct? So as price comes down, what do you think people are gonna be thinking of? They're gonna be thinking, Bitcoin is coming to an end, let's sell everything, right? Okay, now as price comes down, it's gonna trigger a lot of people to start selling, right? And this is the whole idea I was talking about earlier. During a consolidation phase, if price breaks beyond one level, it's gonna trigger either buying or selling. In this case, as we break below this area right here, it's gonna trigger a lot of sells. And as those sell comes in to the market, what happens here? We see the bigger players starting to eat up every sell position and reversing towards the upper side. Once you see that, anything that you do after this price, you have a very, very high chance of things going up in your favor very, very quickly. And that's the key thing here, making sure that things go up very quickly. So one more time, the four main ingredients that we have on this market. We have the V formation. The next thing we have is a consolidation or an area where it's gonna trigger buying and selling as price breaks beyond it. We have the dash of evil or so-called liquidity pull grab, and last but not least, buy a support resistance area. Okay, so let's just play this forward to see how things perform afterwards, right? We see a move very quickly to the upper side. Still a little bit of consolidation in the range, but look at the area where you're getting in at, you're not gonna be getting any more drawdown, right? Things are gonna go sideways max, and then it's gonna start propelling towards the upper side like this. Oh yeah, and then there's one more final piece. Just make sure to hit the like and subscribe button. I know a lot of you guys are watching who are not subscribed, so please do me a favor to support this channel. Just hit the like and subscribe button below. All right, let's get back into this. Now this pattern actually happens over and over again in the market. If I bring you back to 2020, 5 years ago, we have the exact same scenario. Now, remember back in 2020 when Bitcoin was just 5,000, 6,000, this exact same pattern actually happens. What do we see here? We see an uptrend going up. We have support equals resistance zone here that I'm gonna mark out right around here. We have a huge V formation. Now this is very, very huge. But here we have a different type of consolidation I was talking about. Basically a zone where if it breaks beyond it, people are gonna start selling. This is a bit trickier, but let me walk you through it. If I draw a trend line connecting this low, and this low, what you will be able to see is we break the trend line right here and then immediately rejecting back up. Now here's the thought process. What do you think usually happens if we break a trend line? If you break a trend line, people are gonna start selling beyond it, right? That's basically the idea of trading trend line. Once you get a break to the upper side of a trend line, you wanna continue to buy. If you break the lower side of a trend line, you want to continue to sell. This move coming down here looks so strong and it's breaking this trend line here. It's gonna get a lot of people to start selling. And what happens when that happens? The bigger players are gonna start absorbing the market and things are going to propel. So we do see that as price comes down back into this support equals resistance area, things are being absorbed and things start to fly. So it's true what they say, right? The market doesn't repeat itself exactly like how you want it to, but it definitely rhymes. Now, for you long-term holders out there, buying and holding, if you understand this technique, you wanna use this technique on the next pullback the market gives you. But I wanna also speak to those of you guys who are day trading, okay? Because using the exact same technique, you can actually apply this on the lower time frame. Okay, so now let's look at an example that happened very, very recently. Okay, so this is back in April this year, 2025. We have an uptrend, a proven uptrend that we can see from this move up. And we can also see some sort of support equals resistance area right there, right? These highs, these highs, these highs as well. Now, there is absolutely nothing you want to do when price is all the way up here. But as we come closer to the SNR area, that's where you want to start paying a lot more attention, okay? As price comes down, the first thing that you want to see is, again, the V formation. Do we have a V formation? We do have a V formation right there. Now, this V formation is by no far showing strength or momentum from the buyers, which is a little bit of a concern, but don't worry because we are using V formation as only one part of a 4-part ingredient. So we got a V formation, and what else do we see next? We see a range forming right there. Now this is a perfect example of what we were talking about on the blackboard earlier. We see this range and we see a very quick drop from this area. And what is this gonna get people doing? They're gonna start selling, right? As people start selling, and this is where the bigger players are gonna absorb all the position and then bringing price up further, right? We see a very strong, convincing, bullish candle back up into this range. And that's all you need to know to tell you price is going up, okay? So if we clear all of this and play it forward, we will be able to see that price rises very, very quickly, right? Stalls around at 95, and then in just about a couple of weeks actually, we start to break to new highs. Okay, so now I'm on the 15-minute time frame, a much lower time frame than what we were looking at earlier. Now, as I was saying before, you don't need to only use that strategy on a higher time frame. You can also use this exact same strategy on the lower time frame. Again, everything basing off what's taught at urbanforex.com. So check out the courses there. First things first, do we have a trend? We do. If we zoom out, I have this MAs plotted here. We are clearly in an uptrend. Prerequisite, we got that out of the way. Good. Second thing, do we have a support equals resistance area? If I draw a box here, we can clearly see we have broken out of a range and price is holding on top of a range. Now there's nothing clearer than an SNR like this. Okay, so let me just finesse this a little bit, and we have the highs encompassing this high, this high, and this high, and we broke above. So now if we really pay attention here, we see the price came down very, very quickly. Okay, came back up. Is that a V formation? Well, what's the next thing we need after a V formation? We need a consolidation. We don't really get any type of consolidation here because we just start to trend lower again, right? But I want to show you what happened here. We have a move back down and a move continuing back up. Now this is forming, again, what we're calling it a V formation. So let's play this further just to see what happens next. We continue to move up and we are holding. Okay, now a consolidation can happen here as well. All right, so that's the consolidation that we have. And where's the V formation? We have the V formation right here. Okay, last thing we need here, a dash of evil, right? We need a move, in this case, to the downside, getting people to think that a sell is happening and let the bigger boys absorb the power, absorb the sell position and buy it right back up. That's when we want to get in. So if I mark an SNR right around here, you want to see price going down from there. You see a move down, still going down, still going down, still going down. If we see a rejection back up into the range, okay, this is the only thing you need. You do not need to get too precise because the more you try to time more than this, it's gonna cause you a lot of headache. Once you see this, you have a few options, right? You can either put in a limit order to buy as price comes down here, or joining the buys, putting your stop loss below, and then taking this trend higher, right? Let's just buy one Bitcoin hypothetically, okay? I'm gonna buy one, and we're gonna put our marker here. Stop loss do not need to go any higher because we know the bigger players are absorbing the buys from here, right? And let's aim for a 3-to-1 risk reward, because why going small when you can go big when you know the bigger players are involved? So we have a 3-to-1 risk to reward here, taking a buy position right here. Okay, so let's play it forward and see how far we can take this. With a short little pullback and things started to launch. And right there, hit target. Okay, so again, you don't need to catch the absolute bottom. There's absolutely no need for that, right? You just need to make sure you're getting in when the bigger players are ready. Now, I want you to be fully prepared in the crypto market, because the bull market is not gonna go on and on and on forever, all right? There is always gonna be phases in the market where it's gonna become a bear market. So when a bear market does happen eventually, I want you to also be ready. And this same strategy also applies to a bearish market. Let me show you exactly what I mean here. If we just go slightly back in time here, May 2025, which is not too long ago, we have a downtrending market, right? And what else do we see here? We see strong support equals resistance area. All of these were acting as strong support at one point in the market, and then we breached below, right? Now we are looking at them as a potential resistance. So as price is going up to the upper side, like so, we have a choppy move to the upper side, which is good. What happens next? We have a V formation. Now again, the first reversal signal telling us that the momentum might be shifting, okay? Once we have the momentum potentially shifting, the second thing we need is a consolidation. Now the consolidation can come in many different forms, but the easiest form is a range. In this case, we do got lucky. In this example, we do have a range forming, like so, right? As price breaks above, what's gonna happen here? It's gonna trigger a lot of buying, right? As the smaller player starts their buy, we see big players starts absorbing the buys, starting the sell. We can clearly see that here because look at the move of this red bar. It's very strong to the downside. That's a very strong indication that the bigger players, these guys, the big players, they're coming back into the market looking for the sell. When that happens, these are the areas you want to be getting in at. It doesn't matter if you are a few hours late, that's all fine. As long as you're not selling at the bottom, it's all good. As long as you're not selling too early, that's all good. The most important thing here is timing, right? You want to make sure you time the market correctly. So let's put on a sell position right here. Let's mark out our indicator right there. Your stop loss do not need to be high. And let's just take it down to the recent low here. And we are looking at around 3.3R risk to reward. Okay, so let's play this forward. See a quick move down, little pullback. And there we go, reach target, right? Not long at all, right? A 3.3R trade just like that, okay? It's not gonna be easy, but you need to practice. If you need help, check out the courses at urbanforex.com. But this strategy works on all time frame and you can apply it for bullish or the bearish market. So as you can tell by now, these 4 ingredients are the pillar behind these trades. Now these 4 ingredients are only part of 8 big ingredients from the Mastering Price Action 2.0. Now, if there's anything I swore by, it's gonna be the Mastering Price Action course. This is a course I have picked up long time ago and it has done wonders for me. Doesn't matter if you're trading the FX, stocks, or crypto, it's applicable to any market and any asset classes. It comes with a 30 days money back guarantee, so there's absolutely no risk for you. If you feel this video has even helped you just 10%, imagine what a whole 8-week course is gonna do for you. If you're still watching this video, thank you so much. Make sure to hit the like button, subscribe if you haven't already, leave a comment on what you think and where you got in on Bitcoin, and I'll see you on the next one. Cheers. Bye for now.